let you start us off.
All right, fantastic. Thank you so much. Welcome everyone to today's webinar on the guide to the Paycheck Protection Program loan forgiveness. I know this is exactly how you want to spend your post-Christmas week, post-holiday week before the new year. But we do have a lot of great information for you today. But before we get to the information on the webinar and introducing ourselves, I just want to cover a few basic housekeeping tips for today's webinar. So the team that is going to be talking today, the team that I'm a part of, is from zoho.com/CPA. So this is our site for not just CPAs, but for accountants and bookkeepers, financial professionals who are looking to become Zoho Finance partners. Please go ahead and visit zoho.com/CPA to learn more about our finance partner program. You can also find out resources for finding an accountant if you are looking for one. So the system that we're using that you're inside of is called Zoho Showtime, this presentation tool. And there's a few things you're going to want to keep note of. One is on the left-hand side, you'll find the questions panel. So the questions panel is where we ask you to place all of your Q&A questions. And those can be asked during the session. I'm going to monitor those. Val's going to monitor those. And we'll try to answer as many as we can during the session. But we'll also pick out questions from there, and I will ask the presenters directly. So please do use that. If you have any general statements, if you didn't get to tell us what your favorite dessert is, please use the chat box to go ahead and do that. And that's where just kind of general comments will go in throughout the session. You'll also want to take a look at the handouts tab because there are a ton of great resources that Nathan has put in for us, including the slide deck for today's webinar, as well as the links to the different applications for loan forgiveness that we're going to refer to today. So this is a 90-minute session. That means if you need CPE credit, which is continuing professional education, you're going to get 1.5 credits. To earn CPE, you must attend for at least 90 minutes. Complete 5 out of the 6 polling questions that are going to pop up on your screen. And we're actually going to go ahead and launch a sample polling question to give you a feel for what that looks like. So the question is, are you excited for 2021? Yes, very. Wait, is it still 2020? Fantastic answer choices. And I think I speak for everyone when we say we are all very excited for this year to end.
Yeah,
and I can also show the results to everyone. And if you find that you miss a polling question or it goes away too fast or whatever that case might be, on the left side, you'll see polls. Go ahead and click on that. You'll see the polls that have already been launched. You can go and answer your questions at that moment. So don't worry if that poll disappears for you. The other very important point to remember is that there is going to be an evaluation that pops up on your screen at the end of the webinar. So don't close the tab you're in. It'll pop up on your screen. You will need to answer that question, that evaluation to receive CPE credit, but we ask everyone to please take the evaluation. It really helps us make the session better. You can leave comments at the end. You can tell us, we did a terrible job or a great job, or recommendations on what we can do better for the next time. So go ahead and remember this. If you need to come back to this slide, there's actually a cool feature inside of Zoho Showtime, which on the top right actually lets you display all of the slides. You can actually go back to a previous slide that I've already been to. You can't go ahead of the speaker, but you can go back. And if you ever need to figure out where we are, you'll see a green box that says the presenter is here. And you'll find that at the top right. All right, so that's it for kind of the general housekeeping. Just want to go ahead and introduce ourselves. I'll begin with myself. My name is Tala Bakar. I'm the program manager for Zoho's Finance Partner Program. I've been at Zoho for about 5.5 years. It's been an awesome ride. Products are changing constantly. If you've ever been on Zoho.com, you'll know what I'm talking about. And we tend to do webinars that focus on the finance apps. So this webinar is put together by Nathan with some great information. Val is, of course, our resident CPA. So I'm going to let Val introduce himself. Val, you there?
Yes. Good day, everyone, and welcome. You've heard from our little banter we've had earlier that we kind of talk with each other throughout the entire webcast. So welcome. A couple of quick little things to point out here. The zoho.com/CPA site, we had to pick a domain. So don't let that offend you if you're a bookkeeper. Please, that's your site. We're going to add more sites as we go along, but we had to pick one single domain. And also another issue, I was in public practice for about 15 years in a small CPA firm. I started with Deloitte, but you might be wondering, why on earth would these guys at Zoho be looking into PPP? Well, we decided early on that we were going to, as a team, get our nose deeply stuck into this thing and try to understand it as best we can, starting way back when they first started talking about it. So we're not experts. We're not like, legal experts and all that, but we've done, I think, over the entire pandemic, a pretty good job of staying as current as we can on PPP. And in fact, we'll keep you updated. I'm keeping another window frame open over here on some of the news outlets, and we're keeping track of the latest voting on the $2,000 checks that they're talking about as well. We will talk about that coming up. So welcome.
Thank you so much, Val. And just want to introduce Nathan Rogerson, who put all this presentation together. So thank you so much for doing that, Nathan. You there?
Yeah, hey, thanks, Tala. And a little bit about me. I'm on the marketing team over here with Zoho Finance, and I help put together wonderful webinars like this. We also put together an awesome webinar kind of a couple weeks ago about Zoho Finance Workshop, which was awesome. Had a lot of attendance. And little background with me is I have over 5 years of accounting experience with a firm and also with corporate accounting. So that's why I'm kind of fascinated with this type of stuff whenever it deals with accounting and small business. And really, we just put together these webinars to help out small business, kind of like Val was saying earlier.
Yeah, no, I appreciate that, Nathan. And one thing we were talking about is, as the next round of PPP comes out, we're going to update you guys on another webinar of that too, how you're eligible, how we can go through that. So before we actually get started, for some folks that may be new to the suite, I just want to give a quick introduction of where our product suite lies. So just to give you an example of the breadth of Zoho applications. Now, moving on, you'll see we have applications in a variety of a product suite. So, of course, where Nathan mentioned, Val mentioned, we focus all of our attention is on the finance applications. We're all finance guys. That's really where we kind of focus our energies. That's also the team that we are on. So, what I mean by Zoho Finance is that we primarily talk about apps like Zoho Books, which is our full double entry accounting system. It's a QuickBooks competitor, zero competitor, really is a full-fledged double entry accounting app. And one of the things that makes Zoho so unique is that you can find all of the other tools you'll need to expand the tools that you'll need to use in your business. So whether you're a business owner who's looking to expand their own kind of tool chest, or you are an accountant who's helping their clients implement some of these applications, be sure to take a look at some of the other product suites that we have as well. Applications like sales and marketing apps like Zoho CRM to manage your customer database. We even have custom app builders, email collaboration apps, HR products, and even IT and help desk. And I know it can be a lot to kind of take in. So I recommend everyone to check out zoho.com/one. Zoho One is our kind of all-in-one bundle. So that's all I'll say about kind of the general Zoho layout. If you have any questions for us, please feel free to put those in the questions panel. I'm happy to answer them. Now, focusing on the Zoho Finance apps, one of the references we'll make, is reporting. So a lot of the finance reporting that we talk about comes from our application, Zoho Books. Zoho Books really is kind of the nuts and bolts of the finance suite. It really is the anchor product. But there are tools outside of that that may be relevant to you. So for example, if you're looking for a dedicated expense management app, if you're looking for inventory management, subscriptions, and just general kind of creating a checkout page, for example, Zoho has products that expand the feature set that you'll find inside Zoho Books. So go ahead and visit zoho.com/CPA to learn more about these products. Now, we're going to hammer this home because this is the team that we really work on. But if you are a financial services provider, an accountant, a bookkeeper, a CPA, please go ahead and visit our zoho.com/CPA webpage. If you're interested, please apply to become a Zoho advisor. It's a free program for those professionals, and that way we can help connect you with Zoho users who are looking for an excellent bookkeeper or an accountant. Now, the learning objectives for today's session. So we're going to identify which forms are required for PPP forgiveness. There's actually not one form, but there are multiple forms. We're going to talk about the timeline for those loans that were given out and when forgiveness is eligible. We're actually going to figure out whether PPP is tax deductible. We're going to talk about that. There is some new information about that as well. And then, of course, we're going to spend the bulk of our time towards the end. Val's going to go over this. We're going to talk about how to actually fill out the PPP forgiveness application. So we have a couple examples of the different forms. So this is what you can expect for today. Now, this kind of goes in line with our agenda for today. So the agenda includes, of course, going over PPP just to give us a refresher. It's been a long year, and it's been a while since PPP came out, so we may not remember some of those requirements. We'll talk about that timeline, as I mentioned, how forgiveness works, deductibility, and of course, go over that forgiveness application. All right, so I'm going to pass this over to Nathan, who's going to give us an overview of the original CARES Act. If you can please, put any questions for Nathan into the questions panel, I'll be happy to present those to Nathan.
Yeah, thanks, Tal. Thanks for kind of introducing Zoho and doing a warm introduction for Val and myself. So let's go ahead and get started. We have a lot to cover, and definitely the past couple of days, our team has been working pretty, very hard to get all the information together. Definitely with a new PPP round 2. We added a few slides in there over that, even though this presentation is more about the previous PPP. But as far as the PPP CARES Act overview, so it originated from the CARES Act as a small business relief, and it started with over $349 billion. And if you were applying for a PPP at that time, that went very quickly. And I remember we were doing the webinar and it was almost gone. And within a few days, it was completely gone. So it was pretty nuts whenever that one was going on. And also banks were not prepared for it. It was it was a disaster, not necessarily a disaster because people got the PPP, but it was a crazy time for sure. And so later on, they added 370 billion, and this actually held up pretty nicely. And they didn't even get rid of all the funds within the PPP. So it was, it seemed like all the businesses that needed it went out and got it. But that was before kind of COVID took, before COVID really took a grasp over the US and businesses started closing and everything. So a lot of businesses got the PPP loan without needing it, and a lot of businesses needed it and they didn't necessarily get the PPP. So it was kind of crazy times for sure. And the PPP was really intended to keep people on payroll, and that's exactly what it did. And the loans were presented as forgivable and free, and we'll get more into that a little later. And the max amount of the loan was 2.5 times the average monthly payroll. So it was definitely something great on paper, but as the year went on, and we'll get to the timeline later, it was a little bit more confusing in the US. And definitely with the application process, I know a lot of small businesses have gotten everything ready, but they haven't actually applied for the application. And thank goodness, right? Because they just passed a new bill that kind of helps out a lot of the gray areas within the PPP. And so whenever I'm talking about the new stimulus package, this was the one that Trump signed, I think it was Sunday night, right, Val?
Right. So for a minute or two here, we're just going to walk you through what we know of the brand new bill. I guess in a way you could say this is the COVID Relief Act Bill 3, round 3, if you will, with what they've done. And we're going to kind of walk you through that. So go ahead, Nathan. You can kind of walk down through there.
Yeah. So the total bill was 2.3 trillion. There was a lot in there. A lot of it wasn't necessarily for the COVID relief. It was for government spending.
Right,
so
right.
a lot of
General
there.
budgeting stuff. Right, right.
So we're not talking about that. What we're going to talk about is a 900 billion in COVID-19 relief. And here's kind of what it looked like. I mean, this is what it looked like. And the main areas that small businesses need to focus on would be the top 3. So 325 billion in aid for small businesses, including, the second round for PPP, and also 160 billion for economic impact payments, and 120 billion in unemployment benefits with $300 per week for 11 weeks. A lot of people wanted that to be a little higher, but that's what it ended up being.
Right, and that's the add-on to what the state's already doing for them, and also realize that out of this, the 325, I think 284 billion specifically are targeted at PPP round 2. Now, the thing that I find interesting is I don't think the fund for PPP was depleted from round 1. I haven't been able to find a good number, but I actually think there was still money sitting there. I would imagine they'll just pile this all into the same bucket. Maybe, maybe not. You never know with government. But the point here is there's money there to go after again. Even if you've already gotten one PP loan, you can go after another
And the
one here.
important point, Val, in addition to what you're saying, is even though there was money left over kind of on that round 2 and before this round 3, the application window had closed. And so that application window is now opening again. I believe they're giving the SBA about 10 days to get their stuff together. And then the deadline, the new deadline is gonna be in March sometime. I believe it's mid-March or something like that. So we will of course confirm that. But so there is a round 2 that you can actually go into as well.
And we're going to walk you down through the forms as we have them today, and they could change on us tomorrow because they're revamping a lot of their stuff. So just heads up, folks. We'll kind of show you what we know right now and kind of walk you down through. But there's some really nice things they've done down through here that I think will hold if they don't even get easier. So I think that all is good news.
And Nathan, sorry to interject. I just know I'm going to get another question on this, and there was a question in the chat. So real quick, so I just checked. The deadline for new loans is going to be applying for new loans is March 31st. If you already got a loan, you are able to get a second draw loan, and you have to meet the same qualifications. There's some new qualifications as well in terms of having at least a 25% drop in revenues. It has to be for less than 300 employee businesses. And so this is something that we're actually going to cover in a dedicated webinar, but just know that this one, of course, Nathan's most information is focused on forgivebut we will cover that too.
Yeah, Tala, I also have a slide over that, kind of walking us through that. But yeah, so let's just kind of quickly talk about individual support, just in case you're curious. So payments of $600 per individual and $1,200 per couple and $600 for each child. And this is the same as it was before. So you need your adjusted gross income to be below $75,000 or $112,000 for heads of household, and couples AGI below 150. And
every filing joint $150,000. And by the way, folks, this is the one that they were talking about taking to $2,000 per individual, per check kind of thing. The House passed it. Trump's very much in support of this. As I checked just a few minutes ago, Rubio's supporting this. There's some big debate going on in the Senate. I don't know which way this is going to go, to be honest with you.
Yeah, it's. I guess hopefully we'll find out in the next couple of days. But yeah, so if you are over the thresholds, by every $100, it reduces by $5. And I believe, I don't have the caps, but I believe it caps out at like 87,000 for individuals and 175,000 for couples. So just kind of keep that in mind as well. And like I mentioned earlier, unemployment is $300 per week, and that goes for 11 weeks. That's in addition, I believe, to what your state is already providing. Correct, Val?
Yes, it is in addition to whatever your state is already providing. Right.
Yeah, and so basically that goes until March 14th, 2021. So as far as business support with this new stimulus package, so they have a payroll tax deferral. They basically extended the tax deferral to December 31st, 2021. And they now have a new EIDL grant. Well, they also, the EIDL grant from originally does not reduce your PPP forgiveness. And
yeah, that's a significant change, folks. What they had before was if you had an EIDL grant, you had to take that off your forgiveness amount, and there was a lot of confusion about that. And now they're just saying, no, we're not putting that into the EIDL grants. While they might ask you for that on forms, and they still kind of do on the forms, they're not going to take that off your forgiveness amount.
Yeah, and they added $20 billion to the EIDL program, and basically this is a non-forgivable loan, and it's a 30-year loan. Basically, you can put it towards your business, and you can get up to $10,000 in advance. And that is the part that you don't have to pay back. It's a grant, so you just get $10,000, and it's just an advance to kind of help you out in the rough times, and then you don't have to worry about paying it back, and it doesn't lower your PPP loan as well. And so as for meals and entertainment, I thought this was pretty interesting. Whenever I read this, they temporarily increased the deduction for meals to 100%. This is up from the previous 50%. So I thought that was kind of a cool little thing to add on there as well. And now let's talk about the Paycheck Protection Program, Round 2. This is also known as a PPP, Round 2. And like Val mentioned, there will be a dedicated $284 billion for the PPP Round 2. And now whenever we're talking about who is eligible, like Tala was mentioning earlier, for first-time borrowers, they're actually setting aside $35 billion for these first-time borrowers. And essentially, it's the same businesses as before, 501c6, to restaurants, live venues, and EIDL grants. And with the first-time borrowers, you need to have 500 or fewer employees, and the loan is up to $2 million. Compared to the first PPP, which was $10 million, they reduced it to $2 million because I don't really know the reasoning, but I think it's because they were noticing, the businesses that are struggling now are more of the smaller businesses. And so for previous borrowers, though, they kind of changed it up a little bit compared to first-time borrowers. And you have to have 300 or fewer employers compared to the 500 for first-timers. And you have to have used up the original PPP loan entirely. And you need to show a 25% reduction in gross revenue for any quarter in 2020. And really, that's kind of comes down to, as your accounting up to date and everything. So you need to keep track of all that. And definitely, since the year's coming to a close, you should finish up your fourth quarter as soon as possible so you can apply for this loan whenever everything becomes available. Alrighty, so let's continue on. And so for PPP Round 2, loan terms, it is very similar to the previous one. So except for the loan amount being $2 million versus a $10 million. The loan amount is 2.5 times your average total monthly payroll. But one thing they did change, though, is hotels and food services are eligible for 3.5 times average total monthly payroll. So I thought that was kind of cool. Definitely because I know a lot of restaurants that are struggling during this time just because, more people are doing takeout and everything. The cost allocation is still the same. So 60-40, 60% towards payroll and 40% towards business expenses. Same covered period. So you can choose between 8 or 24 weeks. And same covered costs, so payroll, mortgage, interest, rent, and utilities. But they did include additional covered costs, so this is pretty neat. And I have a list of them right here. I think they will have a full list later, but this is kind of the general. So the additional covered costs include protection and faculty facility modification. So if you go, basically anywhere you go nowadays, they have that plastic shield. Or employees might be wearing, a Trader Joe's face mask or something. Those are all included as deductible cost or covered cost. They now, what is considered a covered cost is software and cloud computing services. And this is kind of a broad one that they're saying is expenditures to a supplier that are essential to recipient's current operation. So the way I take that is really anything you need to keep moving your business forward is a covered cost. What are your opinions on that, Val?
Sorry, I was answering another question. What was your question there, Nathan?
So they kind of, with the new PPP Round 2, they were saying a covered cost was expenditures to a supplier that are essential to the recipient's current operations.
Right.
The way I took that is really anything you need to function as a business is
right. I think what they've done is they've opened it up for Round 2, and there was a question earlier about these additional expenses. Can they be used for Round 1? Not that I know of. I think only Round 2 funds can be used for these other essential suppliers, and they're probably going to define that a little bit more for us. But that's how I see it too, Nathan, is anything that's really critical for you to stay in your business. So, for me, electricity now becomes something that I could do. Of course, that was utilities before. I'm just trying to think of some different things
I was
that
thinking
you
there's
could
some
do.
added costs, for example, in the restaurant industry for implementing delivery and takeout. There's going to be expenditures
Oh
related
yeah.
to setting up that infrastructure, maybe buying an iPad for handling DoorDash orders, things like that, which are related to the
Yeah.
current state of the business.
Yeah.
And and I'm sure there's going to be some fine line cases where, for example, there was a restaurant here up in Heber. They bought a bunch of these outdoor igloos, but they're effectively physically distanced, but they're pretty expensive little pods to serve people outside. They got some pretty neat heating and really cool stuff. And by the way, they're reserved for the next 3 months. You can't get in them. Here's the
Yeah.
point, though. Here's the point, though. In traditional accounting, that cost of that little teepee-like hut thing out there would generally be capital asset, and it generally have to be set up and amortized and depreciated over a period of time, whatnot. I'm wondering if something like that you could get in this additional cost, because it was really critical for them to stay in business to do that, because their inside dining was too tight, and to stay in business they had to put these little igloo things outside. So I would imagine there's going to be a number of things that could probably be looked at as a possibility for expenses.
Yeah. So they'll probably, this won't be as gray. They'll probably make it pretty black and white later on. But I need to go ahead and launch the first poll question. And as they're answering this poll question, Tal, if you have any questions for me, you can spit them out.
Yeah, Val's been doing a great job answering some questions. This is actually one that you may be familiar with in your research. So I remember for the first round of PPP, your business had to be already established prior to 2020, right? There had to be some period of time.
Yeah.
Do you remember what that was? And then also for this round of PPP, is there any information out yet that tells us if you did start in 2020, are you eligible?
Right, and I see a question about, we just kind of started up and we're not sure where how we're doing. Can we get a PPP loan? That's a great question on round two. Round one, that would be no. Round two, I have not seen anything yet that would allow you to go after a PPP loan. Tyler or Nathan, have you seen anything? Brand new kind of business, up 3 or 4 months?
I think there's
No, I
definitely
have
going to be from well, I'm using the round one as a template, and I remember for round one you had to have at the minimum, I remember for round one, you had to be able to calculate your average monthly payroll. So if you aren't able to
Mhm.
do that because you don't have an average monthly payroll, you haven't been in business for over a month, I'm going to likely say you're not going to be eligible. But as information is clarified on that, we will let you know.
You know, I'll tell you what it's worth doing. It's worth going back and looking at what they did when people didn't have, you're right, Tal, when they didn't have 2019
Mhm.
data. Their calculation they used for that for round one, go back and look at that calculation and try to come up with your average, monthly payroll, and see if you can't go to a bank and see what they'll have to say.
And I'm glad you
Try that.
mentioned that. There are actually several requirements that going to a bank will help you with, because even though the
Yes,
requirements are one thing, the banks may implement them slightly differently. Every bank may be interpreting things differently, and that's unfortunately the nature of having 10 days to prepare for something like this. So definitely, and don't just contact
right.
one bank. If you bank with multiple banks, contact every bank you bank with, credit union. You may be able to get it faster with some of those institutions, but definitely they will have their own applications. That's another thing. The applications that we're showing you for forgiveness, those are standardized. But there may actually be additional applications for these PPP loans, or even forgiveness perhaps from your loan provider. So they are going to be your most important
Yeah.
resource in kind of doubling up the
Yeah.
data that Nathan's giving.
Yeah, and also with the loan providers, I've been reading online that a lot of businesses are talking about, going to a smaller bank than going to like a Bank of America, and maybe that might be a little easier to get the loan, and they might be able to help walk you through it a little easier. And also, this is round two, so banks should be prepared. So hopefully, with that being said, that you're prepared as well. So whenever you go in there, it can just be an easy transaction. Just you can get it done versus like last time where I think it took like a month before people started getting funds or even longer. It was crazy times. This time should be a quick turnaround for sure. And another thing with the PPP round 2, they simplified the application process. Now, this isn't, they haven't come up with this application yet. And we believe it's going to be one of the applications they already have. But basically, it's going to be a one-page form, $150,000 or less.
I think what they're going to do, Nathan, is take the S form they've already got, 3508, which we're going to go through, and essentially, instead of being $50,000 or less, wave a magic wand, and it's $150,000 or less, and that is huge.
Yeah,
folks, you don't have to worry about FTEs. You don't have to worry about reduction in payroll. We'll get into this later in detail, but I'm telling you, right there, that should signal to you what we've been trying to say all year, and that is for those people that are trying to be in business and stay in business as best they can, they're going to pretty much wave a magic wand on these things and forgive them as best they can. This isn't a gotcha kind of thing.
Yeah, and with this, that being said, this applies to both the previous PPP and also PPP round 2. So whenever you're seeing this one-page form, if you applied for the original PPP, you will be eligible for this one-page form. I think SBA's, they're giving them 10 days for SBA to come up with a form. So we should see it in a week or so. And so whenever we're talking about deductibility, this part is what I think is the biggest controversy from the original PPP. And also this is one of the best things that came out of this for previous PPP loan borrowers is basically business expenses paid from PPP loan are tax deductible.
Yeah, let me walk you down through that, folks. Here's what's going on. I'll let Nathan read his next 2 bullets here, but let me back you up just a little bit. What happened here was, according to the statute, one of the things the lawmakers realized is that if they were going to give you, essentially hand you money and forgive the loan, essentially create this thing and then forgive it, they immediately were going to run into an issue that in U.S. tax code, a loan, once it's forgiven loan amounts are generally claimed as forgiveness taxable income because it's forgiveness of debt. Okay. So they got that part right. They said, no, this is not whatever is forgiven here. This is part of this loan thing, this PPP, that will not have to be claimed as income by the business. Well, then immediately the IRS turned around and said, well, if you're going to do that, then what we're going to say, whatever expenses they try to claim for forgiveness, we're not going to also allow them to deduct on the tax return, which pretty much null and voided the whole thing. It was really crazy. So everybody and their dog, the ICPA, all the CPA organizations, everybody raised and said, no, we've got to get this. Now, go ahead and walk them down through what you got, Nathan. Go ahead.
Yeah, so really the next bullet is just it supersedes IRS guidance that such expenses could not be deducted. And this is kind of a snippet from the new COVID relief bill. And it clarifies that no deduction shall be denied, no tax attribute shall be reduced, and no basis increase shall be denied by a reason of the exclusion from gross income provided. And basically, that's exactly what we were talking about is it seems like the government's looking out for these small businesses, and they are saying that these PPP expenses are tax deductible, which is great. And I know, kind of like Val said, a lot of these organizations were reaching out to the government saying, hey, this isn't not necessarily that it isn't acceptable, but they were just saying this doesn't necessarily help out businesses.
Right.
And by you not letting this be tax deductible, essentially it's taking away the benefit of the loan.
Right. And I knew the IRS was going to get knocked down on this, and they clarified that very well. So here's the thing. Whatever you use to claim forgiveness, mortgage payments, of course, all of your payroll, all that is also, you turn around, get ready to file your tax return. Okay. You can deduct that from the normal income that you have. And remember, the amount of loan that you get is not forgiveness income. So that stands outside of it. So this is as it should have been in the first place.
Yes, definitely. And here's a timeline, kind of just walking through everything that's happened. So March 27th, 2020, I'll just quickly go through this. CARES Act became law. June 5th, PPP Flexibility Act becomes law. This gave the 24 weeks instead of the 8, which helped out a ton of small businesses, and it extended the deadline from June 30th to August 8th. June 16th, the application started coming out. August 8th, revised deadline for applying for PPP loan. That's whenever the revised deadline was. August 2020, SBA forgiveness application for loans of $50,000 or less. I think this one will they'll get rid of this one because they're replacing it with $150,000.
Right.
And then October 26th, SBA announces forms 3509 and 3510. That's for anyone greater than 2 million of a loan.
Right. And if you have a loan for more than 2 million and you happen to be on this call and whatever, you already know about this because your bank or your loaning institution has already reached out to you, giving you different forms and asking you a whole lot more questions.
Yeah.
I've looked at those questions. I've looked at the detail. I'm sorry, this is not going to be a pleasant thing to get down through. If you're big enough to be getting a $2 million loan, though, you probably have plenty of accountants on staff to take care of this because it's quite a bit that companies have to go through there.
Yes, for sure. And now here we are in late December, and Trump signs the new COVID-19 relief bill, which we just covered just a second ago. And if you want to stay updated, you can go to these websites. So SBA website, SBA.gov, or the Treasury website. And these are the direct links to kind of talk about the Paycheck Protection Program. Before we continue on, though, I need to launch our second poll question.
And Nathan, I have a couple questions for you while you launch that.
Yeah, go for it.
I'm sorry, did you want to read out the question for the poll?
Oh, no, it's just a general question.
So the question that we're answering right now, and this applies kind of generally, but the forgiveness applications are not cumulative, right? They're for, let's say you got around 1, you get around 2, you submit an application for each loan that you receive.
Right.
And on a similar note, if you have multiple businesses, you still do the same thing. You have each time you got an application or a loan, then it has its own PPP loan number that's issued by the SBA, and then you'll use that information for the
loan forgiveness, right?
But one thing that I think kind of trips up some people, especially folks that we may have folks on this call who didn't actually apply for round 1, they're looking at round 2 now. The 8 versus 24 week covered periods. I think that's kind of become sort of like we assume we know what we're talking about when we say that. But could you, Nathan, could you please just reiterate kind of what that is? You can choose between the two, and then how soon do all the funds have to be used that you receive?
Yeah, so you can choose between the two, and the catch is though you have to use your funds within that time period. And what the government saw was that the 8 weeks was too short because they were giving you 2.5 times your monthly payroll, and
they
were 10 weeks, and basically they were seeing that businesses were. I mean, I don't even think we went the full 8 weeks before they revised it, but
there was a hidden penalty in there in 8 weeks. Some businesses, and it'd have to be a really odd case, but some businesses may still elect the 8 week. I don't know why you'd elect that. I think you're absolutely better off with 24 week.
Yeah, just gives you more time. And definitely if you have a reduction in pay. What I've seen, it's helped a lot of small businesses if they lost some employees, but then later on they hired them back. So it gives you that 24 whole weeks to kind of regroup and hire back your employees, basically. And that kind of goes more in line with the FTE, full-time equivalents and everything, because I think the average for that, as long as you hire them back and then you start kind of paying back with the average payroll, it works out.
Now, realize, folks, too, though, if you fall under the $150,000 threshold for the simplified form, you don't have to worry about FTEs. We'll come up on that in a minute.
Sorry, I apologize. I just tripped myself up on something, and I wanted to ask you guys. So when we're talking about round 2, because so many businesses this year have skewed payroll, right? Because they haven't had employees come in for whatever reason. Do you know if the payroll is based on 2019 normal payroll that they're giving the round 2 on?
That's what I saw for now. I don't think they've gone to 2020 payroll yet. I think they're still coming off 2019 or that side calculation we talked about, which I'm sorry I don't have right at my fingertips, but I think that's what they're still going off of. So you could go after in round 2 the same amount. If you already did round 1, the same amount of loan you went after in round 1.
And just to clarify, these are still things that need to be clarified. So, the law just went in, so the SBA has leeway in saying, 2020 amounts, 2019 amounts. So I'm definitely going to be on top of that. But this is a question that just came to mind for businesses that started this year. They're in kind of a pickle because they'll need to figure out how to calculate that, right?
I'm pretty certain that there's this kind of a little hole that they found there too. So I'm certain they're going to look at that alternate calculation and make a way for businesses that were started up in 2020, don't have 2019 history to do something. I've not seen anything there yet. Remember, it's all round 2 is all pretty new. So we'll see as we go along.
But based on that other information, sorry to kind of belabor the point, I think it's going to be, again, something you have to reach out to your individual bank on whether a business that started this year eligible. But I would say that it's probably difficult because proving that loss, I think, Nathan, you mentioned 25% loss in any quarter of 2020 as compared to 2019. That comparison obviously can't be made for a new business.
Well, what they did say is that if you're applying for the PPP round 2 for the first time, I don't believe you have to provide the 25% loss because that's for the people who are coming back from the first PPP.
Okay, interesting.
Loan.
So that's something we'll have to clarify.
We'll have to clarify.
And this is a point that I think we'll get to, but I just want Gina just commented in the chat box, and I want to read this out because I think it's a good point. So she was saying the 24-week is easier for showing the spend on PPP payroll, but they ran into an issue because they had to let go of an employee after 11 weeks, and one of the forms, the easy form, doesn't allow you to have a reduction in full-time equivalents.
But Gina, one thing, forgive me for asking this, but if your loan is, let me just tell you this, if your loan is less than $150,000, you can use the short form, which doesn't even get into FTEs.
Right. And that's something that you're going to go into, right, Val?
Well, we're going to go in detail down each form and try to give you at least an idea because, kind of the rules have changed. So the question becomes for Gina, have you already applied for forgiveness and got stung on that, or are you still able to fill out a form? So, we're going to keep walking down through there.
Yeah, so let's go ahead and kind of continue on. So let's talk about how forgiveness works, just in case. This is actually pretty nice just because the PPP round 2, it works the exact same way. And also for anyone who hasn't done their accounting for 2020 yet, or I guess it's coming to a close, kind of keep this back, keep this in mind whenever you're doing your accounting for 2020.
One other question popped up in the chat area, and a reminder, folks, please put your questions in the question area if you don't mind. We can track them a little better there. The question was, I sole proprietor my business and I have contractors, but I stopped paying myself because we're trying to keep the business alive. You could still go apply for a PPP loan for you, and it's really just for you because what you pay your contractors, they've got to go after their own loan. You can get a loan for yourself as a sole proprietor. Now it's limited. You're going to see some numbers there. It's going to be limited. I think, what is it, $100,000 annually or something?
Yes.
Per month. But you can still get a PPP loan just for you if you're the sole proprietor and get help.
Yes, for sure. And so whenever we're talking about forgiveness, kind of what we mentioned earlier is allowable costs. This is for the original PPP, and this doesn't include the new covered costs. But the allowable costs are payroll costs, rent, interest on mortgages, and utility expenses. And the forgiveness ratio is the 60-40. And the covered period, kind of, we've been talking about this a little bit, is 8 or 24 weeks, and no later than December 31st, 2020. And so whenever we're talking about payroll costs, what's included with that? So salary, wage, commissions, or similar compensation, and cash tips. Also payment for vacation, parental, family, medical, or sick leave, payment of state and local taxes for an independent contractor or sole prop, wage, commissions, income, or net earnings from similar employment or similar compensation. Now, what's excluded, Val mentioned this just a second ago, is compensation in excess of $100,000. So any employee that makes over $100,000, you have to adjust to that to get that 2.5 times. An employee whose place of residency is outside the U.S., federal employment taxes, including the employees and employer's share of FICA, and independent contractors do not count. So if you're a small business, kind of like that question earlier, if you're a small business with a bunch of independent contractors, they do not get included for the PPP loan. And so non-payroll costs is business mortgage interest payments, business rent or lease payments, and business utility payments. And also, like we mentioned earlier, the protection, anything to protect you or your customers is included, and anything to kind of keep your business afloat during these crazy times. And I'm pretty sure that will be more black and white. That's why I didn't add that stuff in there yet, because it's not, the actual business expenses are not on paper yet. And so whenever we're talking about forgiveness reduction, your forgiveness will be reduced if salary or wages are reduced by 25%. And if your full-time equivalents are not mandated during the cover period. And there are some safe harbors, though, and there's no need to rehire if the employee rejects the job offer. And what that means is if you go to rehire someone and basically they say no, they like the unemployment better, or they found a better, I don't know if they found a better job. Does that work, Val? I guess if they go out and they find not necessarily a better job, but they find a job in the meantime and they don't come back.
If they refuse to come back to work for you, then
Yeah.
there are some ways you can kind of calculate. Let's say that they work for you half through the 24-week period, they worked halfway through, then they found another job and said, see, and they won't come back. Well, you're a full-time equivalent there, one, for that person, because they refused to come back to work because they either found a better job or refused to work or didn't want to work because they're worried about getting COVID or something. There's a lot of ways calculating the FTE that you can hold them off to the side.
This is the question that I received last time, Val and Nathan, which is, what if your FTEs are not the same people? Like you still have, the FTE calculation, but they're new people. Is that still?
FTEs are FTEs. So you had John up through a period and then left, and Jane, you hired Jane. That's still the FTE of one if you replace that position.
Yes. And also, if the workers are rehired within a certain period as well,
right,
they can come back and it'll just average it out. And
heaven forbid you have to fall into detailed FTE calculations like this, but there's a lot of options they've given you to try to make up for it. Rehiring other people, or having this many people there, and just realize there's a lot of things they're trying to do to help you with that.
And this is also a huge one with this, as far as safe harbors, is unable to operate at 100% due to COVID-19. And Val has a pretty good argument with this one. And he basically says, who was able to operate like they did in 2019 and 2020. I don't think any business was able to operate the same. Well, as far as, if you're a software company or something like that, maybe. But as far as a restaurant, you weren't able to operate the same you did in 2019. So that's kind of a weird safe harbor, and we'll kind of get into that a little bit more with the.
Yeah, before you move on real quick, I just want to ask you a question, Nathan. If you could go back a slide. So that first point, if salary and wages are reduced by, I'm assuming that's supposed to be 25% or more. Is that a one-to-one? Like how do we know how the forgiveness is reduced based on salary wage reduction beyond that threshold?
So what this is it's basically the forgiveness. Your PPP loan forgiveness will be reduced. So if you get, $50,000 for your employees, and say 25% of that gets reduced, the payroll for them gets reduced by 25%, then it's just going to tick down what part of the loan is actually forgivable. As far as
it's dollar for dollar. Once you get past the 25%, it's dollar for dollar, right?
Yeah.
Thank you for clarifying that.
That's kind of a long-winded answer, but yes.
But we've got a question back here, and back on the 24-week loan, and do we need to apply by 12/31/20? all of the forms expire 12/31/20, but I've read somewhere, and I'm sorry I can't pull it back up. I'm almost certain they've given us more time to apply for forgiveness on round one. Tal or Nathan, did you see anything in there? What's the deadline for applying for forgiveness for round one? I went hunting again, and I know it's not 12/31 anymore.
Yeah, it's not 12/31. It's man, I want to say it's like mid. It's in the spring sometime. I'm pretty sure.
I'm gonna hunt for that answer, and I'll let you guys know.
I will find that and post it. Post it in the chat, Tall, whenever you find it. Okay, so if not forgiven, this is whenever the PPP loan becomes an unforgivable loan, and it has an interest rate of 1%. Loans issued prior to June 5th have a maturity of 2 years, and loans issued after June 5th have a maturity of 5 years. So it's still a relatively low loan, a small loan. So if you just took out the loan just to kind of keep your business afloat, it's just a 1% interest rate. So it's not horrible, even though it'd be probably better if you got the full forgiveness. The loan payments will be deferred for borrowers who apply for the loan forgiveness until SBA remits a borrower's loan forgiveness amount to the lender. If a borrower does not apply for the loan forgiveness, payments are deferred 10 months after the end of the covered period for the borrower's loan forgiveness.
And I believe accrual of interest as well is deferred for 10 months, if I have that right. So after your 24-week period, they're giving you plenty of time to try to recover on this.
Yeah, definitely 10 months. Hopefully should be enough time. It seems like there's definitely great things on the horizon for the world and the U.S. and also, North America and
Nathan,
everything.
kind of on the similar point that you have on the slide right now, on SBA.gov, they have a Q&A, and so they mentioned the expiration date that's on the loans has nothing to do with the deadline. I think that is what tripped up some people.
Right.
That's like an internal SBA thing, which I wish they didn't do. But they answer that the loan can be forgiveness application can be submitted anytime before the maturity date of the loan, which is either 2 or 5 years. And so if you remember, folks, if you got your loan before June the 5th, I believe, right? June 5th, 2020, you were in the 2-year camp. If you got it after that, you were in the 5-year camp for maturity date. But then there's a stipulation that says, however, if the borrower does not apply for loan forgiveness within 10 months after the last day of the borrower's loan forgiveness covered period, so 10 months from the end of your 8 or 24-week period, cover period, loan payments are no longer deferred, and the borrower must begin making payments on the loan. So this may possibly mean that you can still apply for forgiveness, but definitely don't put yourself in that situation. I would say the worst case scenario, and somebody mentioned this in the Q&A, so thank you for pointing that out. I believe so 10 months from the end of your covered period.
Right.
You need to circle like 9 months and put it on your calendar and make sure you do that like way before that.
And don't let the dates on the forms fool you. What the government's doing is they're just trying to keep track of their own forms and expiring forms on dates, and don't let that throw you. If you're making an honest effort, they're gonna work with you. And I don't think you want to delay too much past your covered period. With the current forms we have now, based on which category you fall in, I'd be all about it.
Yeah, just whenever they come out with the new guidance and everything, and definitely the current forms, because it seems like they're going to just swap out that $150,000 with the $50,000 one. Right. And so it's going to be very simple for businesses to apply if you didn't get over 150.
There was a question too, Nathan, about, well, how long is it taking the SBA to get these things forgiven? I have not heard of anybody that I've checked with who's applied for forgiveness that's actually received their approved forgiveness. Essentially, the SBA agreeing with them or coming back.
I actually know someone in my family. They applied. Yeah.
Oh, they got it?
Of the two businesses, one of them already applied, one of them already approved. And again, this may have something to do with their relationship with their lender and their ability to quickly vet their application. But the SBA did tell their lender that their application had gone through. So I think they are starting to be approved.
How long did that take, Tal? From when they applied for forgiveness till they got notice it was?
I will double check. I believe it was in a month's time or so.
Wow. Okay. A month for a government organization, I'd be thrilled.
Yeah.
Yeah. And one thing too, I talked to a few small businesses where they took the loan in the very beginning, and basically they weren't impacted that greatly by COVID-19, but they thought they were, so they still took it, and they were kind of nervous about applying for forgiveness even after that. I would just advise you to kind of either talk to your accountant about that, or just kind of think to yourself that, at the time you needed it, so no one knew what was going to happen with COVID-19, so don't really get too worried about that. So let's go ahead and get to before we get to the PPP forgiveness application forms, I'm going to go ahead and launch the third poll question. And there's a lot going on with these PPP loans, and I feel like every week it changed for us at one moment during this past year, but
excuse me.
Seems like with this new COVID relief bill, it's going to be a lot.
So this
cleaner.
is an important question we got in the Q&A for you guys, which is let's say a business has not been able to operate because their business falls 100% under lockdown, and so they're not paying anyone, and so they're using all of their PPP on rent. So they're outside of the 60/40. Are there any kind of caveats that those businesses could still go in and say, hey, we know we're outside the 60/40, but this is why, is that okay, sort of thing?
Wow. That's a great question. And I'm sitting here grinding my brain through this, trying to figure out, even though they were completely shut down.
Because of a government order.
Right. Because of a government order, I don't know that we can get around the 60/40. I think no matter what, even on the S form, you have to be 60/40. Yep.
Yeah. They haven't really clarified that. And honestly, from everything I've seen online, no one's talking about that. So that is a really good question.
I think with the number of folks we've had attend these sessions, if everybody contacted their congressional representative and said, hey, I'm a small business owner, this may be something we need to get clarified, because I think that is a very important point that our attendees have brought up. So that's something that we'll continue to find out information on that. But hey, it never hurts.
Yeah.
And I know this is kind of getting out into the weeds here. I've only done this a couple times, but if you ever do call your representative's local office, they call you. I mean, they will get you an answer. You're their constituent, so it's not a bad idea to actually reach out to them as well. I know that's getting out into the weeds, but just wanted to kind of rant over, point that out.
Yeah, and it's especially where you've got a government that shut down your whole business and not even allowing you to run. Try to get some help somewhere. I would talk to your lending institution first. Where did you get the SBA loan or the PPP loan from? Go back to them and say, hey, look, I can't pay payroll. They won't let me open up and pay payroll. How can I meet the 60/40? See what they have to say. They might know more than we do, and I'm sorry we don't have a great answer for you there.
Yeah. Well, thanks for kind of bringing that to our attention. Definitely whenever we talk about the PPP round 2, we'll kind of keep that in mind as well. So let's talk about the forgiveness application forms. The loan forgiveness applications are 3508, which is the regular form, the 3508 EZ, self-employed or employers meeting one of the safe harbors, and then form 3508S, PPP loan was less than 50,000 or less. 50,000 or less. This is the one I'm thinking they might change, or they might just get rid of this 3508 and combine it with the EZ form. So we'll kind of see what happens with that. But these forms still are live, so you can still fill them out and apply. The one form I do think is not going to change at all would be that 3508, though, and we'll kind of get into that here in a second.
Yeah, that's the long form. That's the troublesome one. We had a question on seasonality, and I'm not exactly what part of seasonality you want to know about. The only part I was aware of on seasonality was in calculating your loan amount. You could go back and do some different calculations based on seasonality. I'm not sure what other issues.
So I think the point was that they had received a loan amount based on the seasonality calculation, but the forgiveness was not being calculated on that same calculation. So I think
right now, yeah, it's not.
So that's because then that puts you at a significantly lower forgivable level than it would be. That seems like something that has to be
unless they fall into one of these forms where they're not even going to get into that. See what I'm saying? Are you worried about the 60/40? Is that what you're talking about?
I'll clarify, but I believe it has to do with your loan amount under seasonal fluctuations. Maybe you got a higher loan amount, and then the forgiveness is only being calculated based on some type of different calculation. So if there's a specific calculation, maybe we can come back to that.
Well, and here's the issue. I guess if you're seasonality and you're in a low season, they might have trouble spending the money. See what I'm
Yeah.
saying? And you still got to fall under a 60/40 even for the S form. So, and you still have to use up all the funds in your covered period in the 24-week period. So, yeah, there's some issues there. Let me see if I can answer this other one here. There's another one.
Before you read off that question, I'm going to go ahead and launch the fourth poll question while you read that question, okay? So you can go ahead and read that, Val. It's just a general question.
I'm sorry, the one that you posted as a polling question?
No, you can read the question you were just about to read.
I just answered. It's on contractors. Contractors, folks, payment to contractors. That's not payroll.
And
okay.
Here's another question for you. So if 100% of your PPP funds are used for payroll purposes, do you still have to report non-payroll costs? How do you kind of show the allocation of the PPP fund?
If you're 100% payroll, you're golden. Just don't even worry about the other costs.
You're good to go. Yep.
Okay,
awesome. So let's go ahead and continue on so we can get to those forms, and hopefully we can finish the forms quickly so that we can get to just Q&A for the remainder of the session. So what you need for these forms is you need your payroll information. You can get that from your bank account statements, payroll reports, documents from a payroll provider, or if you're using accounting software, you can get it from there as well. You need your tax forms. Go ahead and get both federal and state, 941 and 940. And you need your FTE information. If you're below 150, I don't know if you necessarily need this. We'll kind of get into that later, but for the most part, it'd just be good to have just in case. It's never wrong to be over prepared. The average number of FTE employees on payroll per week employed by the borrower between February 15th, 2019 and June 30th, 2019, or January 1st, 2020 and February 29th, 2020. So you just need that average number just so you can say, this is my full-time equivalent.
Well, that's if you have to get in a full-time equivalent. So
yeah.
And there was another question about sole proprietors. Forgive me for this, folks. I read somewhere, and I probably should have had the form there. I actually think there is a form for sole proprietors that you use to fill out if you're a sole proprietor and you're looking for forgiveness for money that you paid yourself, which is different than what we've got here. We're going down through there. Either of you guys remember anything on that? I remembered reading something on that. However, let's say you're a sole proprietor and you pretty much just paid yourself, and that would easily fall into your 60/40 thing. And let's say it's less than $150,000. Now, here I'm making an assumption. I'm guessing, and I'm pretty strong on this guess, this form we have in front of you right now, 3508S, simplified form, that number will get changed from $50,000 to $150,000 or less. This is a 2-page form. Page 2 is nothing but demographics. So everything's on the front page here. So if your loan is for $150,000 or less, I'm pretty certain you could use this form and you do not get into FTEs or anything like that, or reduction of payroll. The key questions are this. Did you use that money that you were given for payroll? Did you use the 60%? And if the 24-week period applies, did you use your amount that you got borrowed? And also, did you have the cap of the 28/33 per individual that earns more than $100,000? Okay, so if a 24-week or 8-week, so you're essentially, all you're doing here, folks, down this form is certifying. Now, let me point out a few things here. If you got the form up in front of you, I really should have started top of the form down. I apologize. Simple stuff you fill out: who you are, business name, your taxpayer identification number, your SBA PPP loan number, lender loan number, PPP loan amount, PPP distribution date. They're going to use that to start your covered period. Notice they ask you, though, how many employees at the time of the loan application, and how many employees at the time of the forgiveness application. They never do get into calculating FTE reductions here. They just want to know. Then they do ask you for EIDL and the number. I'll bet they drop that on the next version of this form because they're not taking that grant off your forgiveness anymore. Then right here, you self-put your forgiveness amount. Okay. Well, if your loan is less than $150,000, let's say you got $140,000 and you can certify you met 60/40, your forgiveness amount is $140,000. You just put that in there. What's going to happen is if they question anything, they'll dive into details. Let me tell you why they did this and why they bumped that up to $150,000 or why you might actually see it go higher. They don't have enough manpower to go checking all these forms.
Val, just to clarify, this is the short form, right? This
is 3508.
This is for 50,000 or less.
But they just changed that to $150,000.
Okay, that's what I want to clarify because I think they haven't released the newest version of this, and that's why that's why like you can't read the instructions too closely because they may put you into a box that you actually don't need to be in. So just to clarify, this 3508S, this is a short form. The updated guidance says up to 150,000. Okay.
Right. Because they even said in the new statute, a short form will be done within like 10 days. Okay. Well, the short form is right there. If they get any shorter than that, it's just got to be better for you. But $150,000 and less, plan on using the S form. Okay. Page 2 of the S form, Nathan, if you want to step past that, it's all demographics. Okay. We're going to see this on every form out there. They're asking demographic information. This is not even worth spending time on. Let's go down to page 1 of EZ. Okay. Now, as far as I know, EZ still stands in place here. Okay. And EZ is usable, from what I understand, up to, I saw a number. I think you can use this form up to $2 million.
Yeah, I believe so. Yeah. It says, I think it says on there, if borrower received PPP loans in excess of 2 million check here, and I think that's going to be a
trigger point.
Yeah,
let's go top to bottom on this one too, because somebody was worried about. Wait a minute, I need to get into these FTEs and stuff. Not unless you're a pretty big outfit, in my opinion, because even the EZ form. Let's go top to bottom on EZ. You're gonna have to really get outside of something here, because what they're asking for here is, if I believe some of the trigger points are on the back side of this. So the certifications, same certifications as the S form. And there's two other qualifications before we go down EZ. If I could, I want to take you to page 2, and then Nathan, I'm going to come back to page 1. Okay. At the bottom of page, here are the qualifiers. The bottom of page 2, EZ. Okay, and I'm going to read these. In addition, the authorized borrower must certify to initialing at least one of the following 2 things. The borrower did not reduce the number of employees or the average paid hours of employees between January 1st, 2020 and the end of the covered period. In other words, you really had no reduction in your business. So I don't know if many of you are going to be actually able to check that one. But here's the second one. This is the one I think a lot of you could fall into. Even if you reduced employees, even if you reduced their payroll, even if you have lower FTEs. The second one, the borrower was unable to operate between February 15, 2020 and the end of their covered period at the same level of business activity as before February 15, 2020, due to compliance with requirements established or guidance issued between March 1st, 2020 and December 31st, 2020 by the Secretary of Health and Human Services, the Director of Centers for Disease Control and Prevention, or the Occupational Safety and Health Administration relating to the maintenance standards and sanitation, social distancing, or any other customer safety requirement related to COVID-19. That is a huge catch-all. So if you were required to shut down of any kind, which almost every business was, you should be able to check there and then go back and use the easy form. Okay. So now let's walk back page 1. Nathan, go back to page 1 for a second here. Let's walk down the easy form. All right. So what they're saying is you got a loan for more than $150,000. You're able to check one of those 2 boxes down there. All right, here we go. What they want is your typical loan information, loan number, loan amount. Okay. Once again, they're going to ask you for number of employees at the time of the loan application. And once again, the number of employees at the time of the forgiveness application. If they see a big enough discrepancy there, they could question it. They could come back and talk to you about it. They're going to ask you for EIDL advance amount and EIDL number. Once again, I think that'll probably disappear in the next revision of this form. They're going to also ask you on frequency of payroll. They're just getting more details. Why? They're trying to use this form to look and see where they might need to dig a little deeper. And in fact, if you come down and put your covered period, they want to know your covered period, alternative covered period, and then the big trigger in here, if you borrowed more than $2 million. Well, if you borrowed more than $2 million, the reason they're triggering this here, you shouldn't be on this form because there's 2 other supplemental form we mentioned that your lending institution should have already sent to you that you've got to be grinding through. And I would imagine as part of that process, they're also going to throw you to the long form. Now, that's a guess on my part. I think they're going to throw you to the long form. Mm-hmm. But just to kind of walk you through this form for a minute and show you how they're trying to help you. Let's say we got a loan of $200. I'm just using $200. Okay. I want to keep it simple. I come down to the first line there and I say my payroll costs. The bar that I've got across, that's real easy here to use this form and get it all forgiven, is 60% of 200, 120. So if I come down here and I already start that off by saying like I got $100 there. Okay. So I got $100 in payroll. Okay. And then I got 20 in mortgage interest. I got 20 more in lease payments and 10 more. Well, you come down to the next 3 calculations and 60% of 200 is 120. And I only used 100 of it for payroll. That means $20 I'm going to end up with have to pay back. But if I cross that 60%, it's the calculation on line 7 there, because what you do, you add your numbers above there. You put your PPP loan amount on line 6. Line 7 is essentially the qualifier saying if you used 60% of that amount for payroll purposes, here's your get out of jail free card. They'll take the smallest of line 5, 6, or 7. And once again, your safety net there, on my little example, as long as I use more than $120 of my $200, I'm going to be golden here. Otherwise, I'll end up with some pay back here. Notice nothing about 25% reduction in payroll, nothing about FTE equivalents or quotients here. This should, in my opinion, catch almost everybody else on the call. Okay. You shouldn't end up to the long.
To clarify, Val, what is the loan limit on the easy form?
There is no loan limit, but they ask you if you got more than $2 million. The real limiting factor is those 2 questions on page 2. If you can't answer one of those 2 options,
the ones at the bottom,
right? Those 2, it's right at the very bottom, and you'll notice those same questions were not asked on the short form. Short form, if you're $150,000 and less, they're waiving it. We don't care. We don't even want to talk to you. We don't have time. We don't have manpower to enforce that, and we're really worried about it. You've just got to certify that you spent 60%, at least 60% on payroll. Now, if they have reason to believe you have not spent 60% on payroll, you get a whistleblower, you get something else going on. Can they still come in and blow you out of the water? Absolutely. That falls into a whole different deal, folks. That's fraud. Okay. And another thing we're showing you right now is going to get you out of that bucket. Okay. So you ought to be really straight with them what you used on the 60/40 and on everything else. All right. Let's see if there's anything else on the easy form. As far as I can see, folks, I've read through these forms till I'm almost blind. And I'm sorry about these.
Sorry to kind of belabor that point, but on the last two that you showed, Nathan, I remember we talked about this in the last, if you go back one slide, I remember we talked about this in the last presentation, which is that the safe harbor, right? It's initially at least one of those two is that if you were not able to operate, like the second one, the borrower was unable to operate between at the same level of business activity as before that, then that should be good, right? I mean, most businesses, I think almost every business should be able to certify that they weren't able to operate at the same level, and they would be able to initial.
I don't know how you prove
Right.
that, but
it's pretty easy with all the government regulations and mandates that have come
well,
down.
yeah,
If you had a lockdown and you
then,
had any kind of restriction that prevented your business from operating at the same level, that would be all you need, right?
and then on the easy form, don't forget, you still got to go back, give your numbers. You got to prove you spent, where you don't have to do that on the S form. You just have to say, I guarantee you we spent, 60% on payroll. On the easy form, you need to show them the actual numbers you spent where, and they're going to calculate your minimum forgiveness there. But if you just spend at least 60% on payroll, you're golden, seriously, because it'll fall out in one of those numbers. Even if you look at that form carefully, even if you didn't quite spend, so if you let's say you spent 65% on payroll and you didn't actually spend the rest of your money quite yet on utilities or whatever, if you actually do the math on this thing, it will actually drop out and still, oh, no, it actually does not, because you do the add up the lines in the minimum one. Sorry, you still need to spend the other 40% on something that qualifies. I apologize. Getting a little ahead of myself there. Let's move on next to any other questions or comments, Tyler?
This is a question I have, and I actually clarified it with that family member too. It took them actually 2 months. They have two businesses, and they got one of them forgiveness approved, one of them not, and they submitted both at the same time. So it's not fully clear on how that works. But this is a question I have for you guys, which is, if you submit an application and on the original rules, I believe we talked about EIDL advance is PPP deductible, but I think they were doing that themselves, the SBA, in terms of calculation. But is it true that that's no longer PPP deductible? And if so, if you haven't gotten your forgiveness yet, can you reapply? What should you do in that scenario? I'm throwing curveballs at you guys.
Yeah, no. So the EIDL now doesn't reduce your PPP. So if you already got the forgiveness, I don't know. That's why we were kind of telling people, hey, kind of hold on, just get everything ready and just hold on, because they're changing every day.
So you're saying, Teller, that they took off the EIDL advance on their forgiveness amount? I mean, for the forgiveness amount?
If somebody applied already and they self-reduced because that's how they thought that was.
Of the EIDL advance, the self-reduced one can go back. That one has not been addressed anywhere, as far as I can tell. They might need to go back and talk to their lending institution and say, hey, we understand now, if we had waited and filed forms now, they're not going to hold that EIDL advance against our forgiveness. Is there something we can do? I have not seen anything on that.
Okay, because basically they'd be, and then another point on the EIDL, which is the income itself that the EIDL advance shows, the $10,000, let's say up to $10,000, is not, we don't know yet if it's, the IRS has said that that's taxable income or not.
That's not taxable. That's a grant or loan. Think of that as a loan grant thing. It doesn't fall into taxable income no matter what.
Okay, and but the expenses incurred, like let's say you use that $10,000 to go do a bunch of business expenses, obviously, those are also tax deductible expenses.
Yes, absolutely.
Yeah, with the new
grant/loan, and when you get a grant, that's just free money to spend on business. If you spend it on business, you can deduct for your taxes. The loan side of it, you got to pay back anyway. So yes, anything you spend it on is tax deductible.
Yeah,
absolutely.
Before we move on to the last form, I'm going to go ahead and launch the 5th question. We do have one more poll question at the very end, so kind of keep that in mind as well.
Okay. And while you're looking at that poll question, folks, I'm just going to look back at every time I look at this long form, I have to look at it again and again and again. Let's see if I can walk you down through this.
Here's an important question. I know we mentioned this, but we've been saying a lot of things really fast, so people may have missed it. The S, 3508S, that's a short form that we keep calling, that is up to $150,000 in PPP loan.
Right.
Well,
I'm pretty certain that's what it is.
Right.
Absolutely. Because that was our law
And
that
the
passed.
EZ
Right.
form doesn't have any hard limits on loan amount. However, it asks a question if you received over 2 million, but it doesn't actually do anything else. And you can see it on the screen right there.
And somebody put in the chat area a nice checklist for the easy form. I haven't gone back and read it in detail yet, but it's very helpful. Go to the chat area and look for that little easy form checklist that was put up there.
Yeah, Jonathan.
By
Thanks
Jonathan.
for putting that up, Jonathan.
Yes, thank you. Absolutely. Folks, look at that for easy just to make sure you're good there. But I'm pretty certain most everyone can get down through that easy form.
And that family member that
Sure.
did receive forgiveness already, they used the EZ form on that application. So they said 2 months, but they're still waiting on another one. So hopefully that's
Right.
not something you have to wait longer for.
Now, let me give you what I know on the long form, folks. And first off, let me just say this. This is the form they're actually trying to get rid of now. They're desperately trying to get rid of and get away from because it's confusing. It's in detail. And let me just say this. If you fall into this form, the very best piece of advice I can give you is go out and hire CPA, somebody who's been doing these, who knows this form inside and out, because you don't want to get caught in the FTE reduction and you don't want to get caught in the reduction of payroll. Those are the two getches here in the long form. So on the first page, it's going to look similar to like your easy form. You're going to read down through there and think, oh, it's just 8 or 9. It's the same kind of steps and items and whatever. Not really. When you hit line 5, we go back to a subschedule. When you hit line 8, line 7, we go back again to a subschedule. And to kind of net that down, okay? First, you need to look at a couple of safe harbors. Slide up to page 3, if you don't mind, Nathan. You've still got the typical certifications on page 2 that we've already talked about with the easy form. Page 3, though, please look at the bottom. I'm going to give you the safe harbors here. Down at the bottom, you can essentially avoid the FTE reduction calculation if, first one, there was really no reduction. I don't know why they said that right there at the top. So if you could check that box and say, we really didn't slow down the business at all. We still used our money for payroll and everything else. We're good. We're golden. So I don't know many businesses that really could say that. So the next safe harbor, which they call safe harbor 1, if you're unable to operate between February 15th, 2020 and the end of the covered period at the same business level activity as before February 15, 2020, due to compliance, so this is very similar to the question on your easy form, due to compliance with local or whatever governments, check there. Okay, at least for that one, like the easy form, that should be an opt-out for you from calculating FTEs. Okay? If you can't meet that, then it says here, you got to go back to another FTE safe harbor, and that falls back to Schedule A. Schedule A, next page, if you don't mind, Nathan. If you're a big enough organization to fall into this, you're just going to have to create your own spreadsheet to support it because you're going to have tons of employees. And each one, you're going to have to go back down through here and show employee name, employee identifier, cash compensation, average FTE, and follow the instructions on the date. So I'm not going to jump into them. They're confusing. You have to go down step by step by step. But essentially, this is the gotcha where they're trying to see if by the end of your covered period, you have a lower number of FTEs than you had at like February the 15th, from February 15th to April 26, 2020. So they're going to do a little averaging in there, as Nathan mentioned, on dates. If you get caught in that percentage comes back to the front, page 1, okay? Back to page 1, down on the quotient, which is line 8. No, it's line 7. FTE reduction quotient, okay? And that can be really, really nasty if that catches you there. So hopefully you get out with one of those options. Safe harbor 2, okay? They have you do a simple calculation down through here and look at your FTEs on different dates, and they'll compare that. But the problem is, if you really fall into this, they're probably going to catch you there with that, and you're going to end up with a reduction quotient. They also look, this is where they look on Schedule A, this is where they're looking for reduction in payroll hours or reduction in payroll rate. Either hours reduced more than 25% or rate reduced more than 25%. And they've got some detail in the form for you to follow to calculate that. That does not turn into a quotient. For example, one calculation for one little business that I was helping a little bit that got stuck in this form until they came out with these other two forms. They were at an 89% reduction quotient on like a $300,000 loan. And wow, based on FTEs. The payroll reduction, the 25% payroll reduction business falls in for either rate or hours. And it comes off dollar per dollar. And they've got, what they do is have you figure out the average number of hours the person worked, what's the rate is, and that's how they're going to get back to dollars there. Okay. So yes, that is a tough schedule to go through if you have to go through that. And once again, highly advise if you need to go down through that form, get an advisor to help you there. Right, Nathan, did I leave you enough time there to get your question in? I think I did.
Yeah, so I'll go and launch the last poll question, and really just kind of.
You've been looking at the regular questions too. I'm sorry, Nathan, let me cut it. Is there anything like real key there we can talk about? I just doing a poll.
Yeah, there are a few. If you want to just kind of peruse through.
Okay, go back in.
There's a few. I think we just want to go over the original stuff just to help clarify, because we've been going over so many things. So 3508S, the short form, up to $150,000, doesn't even ask about FTEs. 3508EZ, pretty much for everybody. That's the one you recommend. If you're above 150, EZ is the form you're going to be able to use. And then I guess the question that folks keep having, and I think this is one maybe we can clarify, which is FTE calculations at the time you got the loan. If they were reduced by, let's say you fall under that category, if you had to reduce by over 25%, right? Because even the checklist that Jonathan posted earlier, it has, it says you can only qualify if you fall under this category. If you reduce over 25%, does that then push you to the long form? Is that what this looks like to you? If you had to reduce your employees by over 25%, what do you say to those people?
I think you're going to get pushed to the long form if you can't answer on EZ one of those two questions, and say that so essentially what you're saying is what pushes you to long form is when it was, because the bottom of EZ, that second question is essentially asking you, did you get shut down by somebody? Okay, were you not able to run based on some governmental decision, some shut you down? So what they're essentially saying here is, if you voluntarily shut down, if you chose to shut down on your own, you're going to fall into the long form.
Right, but exactly, but the checklist is actually very helpful. So if you scroll up in the chat, other folks who are looking at that EZ checklist, I'll post the link again. But the third kind of qualification is an and statement. So the borrower did not reduce annual salary by more than 25%, and they were unable to operate because of government regulations. So there is, and then the second point is you did not reduce by over 25%. Yeah, and so I think in those cases you're going to be pushed to the long form if you were in that threshold, which I think is actually probably more people than we initially realize.
Yes, I think you're probably right on that, because I'm looking at this now in detail, and you could be right. So I'd say look down this checklist for EZ and see what that has to say down through there. I'm just starting to read that now, Tyler.
No worries. So that's just the regular 3508 form that you've been going over, right, Nathan? And then links.
Yeah,
links are posted in the handout. Right.
And who knows, that form could also change, folks, based on the new law. And let me do one last little check on something here before we close up this thing. I have not heard any words on the vote on the $2,000 note still.
And
there was a block on the quick vote. They're grinding through it, folks. We don't have.
We'll find out about that. But on another point, Val and Nathan. So this is a question I think I've been kind of messing up a little bit, which is, if you're an independent contractor, you're under that 100,000 threshold that you were able to get the loan for. The 40% for non-payroll related expenses. So you didn't pay yourself, but can you use that on your, your home? If let's say you're a home-based business, home mortgage, stuff like that. How do you apply those calculations for overhead for an independent contractor?
Okay, so you're a sole proprietor. Essentially, you got the loan for yourself. You follow that form and everything. As far as I can tell, it's home-based business, and home mortgage should be qualified. But there are special instructions that I didn't study in detail for those that are self-employed and go and get a PPP loan for a self-employed person. And I believe there's even a special form for forgiveness, but I didn't dig into that one.
Yeah, the very top of the EZ checklist, that's one of the qualifications. So you can use EZ, the 3508 EZ, if you were a sole prop.
Right.
But that would obviously put you under whatever the calculations listed in, for that EZ form. So that's something I know this is kind of like a broken record, and I feel it's a little bit of a cop out, but the lender you went through is going to have some of this information because they were able to approve, get your loan approved. So they're also the ones kind of on the hook for figuring out.
The other thing, Callie, you could do is, I'm pretty sure you could just pay yourself 100% of the loan, and then it's all payroll if you're self-employed.
Right. I was actually thinking about that earlier, which is
isn't
payroll kind of like the holy grail, where as long as you pay.
You don't have to spend 40% on utilities. You can use 100% payroll.
And somebody mentioned this earlier, and I know we're totally out of time, but somebody mentioned this earlier, which is, it seems like the primary intent of PPP was for reducing unemployment. And if I remember correctly, at the very beginning of PPP, it was 100% payroll, and then they were like, oh, I guess not everybody can only use payroll, and so they added in kind of the 40%.
I can't remember. Originally, it was 25. It was 75, 25. 75% 25% other, and then they dropped it down because they realized, that's too onerous. But yes, what the bottom line, PPP is all about the government simply trying to hand money to businesses that are doing their best to try to stay in business. That's it. Literally just hand it to you. Tax-free, forgiven, all that. That's what they're trying to do. They got to have a process to try to figure that out, and they got to have something to catch the bad guys who are lying about stuff. And that's why all these forms.
Yep.
All right. Well, I know we are out of time. We went a couple minutes over, so I apologize for folks if you had to jump, if you have to, go to another meeting or something like that. We really, really appreciate having you here with us. As we mentioned, we are going to do another webinar at the beginning of sometime, next year, which is literally in a few days, thankfully, focused on round 2. Don't be worried, folks. If you have questions, feel free to send them to us. We're happy to kind of help direct you. An important point on that last question, which is, if you need help from a finance partner, we actually have one in the chat right now. Ann Jaggert is a CPA in the Austin area, and feel free to put up your email if you'd like to share that. We have other Zoho partners at zoho.com/CPA. We're happy to connect you. We'll put our emails in the chat real quick, just so if you have any questions, feel free to send those over to us. As Val mentioned, we're not able to give you like legal advice or help you with calculations, but we are here to help guide you. The recording will be sent out to everyone, so you'll receive that in just a minute. And we are going to close out the session, and then you will see the evaluation pop up on your screen. So thank you again. And any final thoughts, Nathan and Val?
Thanks, everyone. Good luck, everyone.
Yeah, thank you, everyone. Thanks, Val, for going over that. I know it's not easy staring at that form for hours.
And sorry, last point, which is once you fill out the evaluation this afternoon, you should receive your CPE certificate from me. So look out for that in your email.
All right, thanks, everyone.
Real
Have a good
quick,
day.
I know I keep going on. Ann just posted her email. Ann Jaggert is a Zoho Finance partner. We'll include her contact information in the available partners you can reach out to. So thank you so much, Ann, for posting that. All right, everyone, take care.
Take care. Bye.